So let's look at today's Frontier opening bell. I am Bosin Amofaye. Welcome my panelists this Thursday, 29th of October. Ali Khan Sacho, CEO and founder of Rich Frontiers Management in Nairobi. Good morning, Ali.
Morning, Bosin.
Thank you very much. Hope you enjoyed the chilly period in Nairobi this Thursday. But in Nigeria, here's a public holiday. Streets of Lagos a little bit quiet today, and that's where Uchenna Minis is joining us from. Uchenna, thank you so much for coming.
Thank you.
Yeah, Uchenna, Global Strategist and Managing Partner at Blue FX Nigeria. So we're going to start from the marketplace. And Nigerian stock market roared yesterday, 1.58%. That was a very bold statement as we continue to see very positive earnings from many of the listed companies, perhaps with the exception of Julius Berger, the construction giant, posting nearly 2 billion naira loss in the first 9 months of this year. And that is well understandable, but the cement, MTN, the food, beverage companies were turning in at least good numbers. We're looking out for more. Ivory Coast market, 0.95%. Investors push the market up despite the concerns going on in Ivory Coast about folks stocking up on food, energy, fuel, and all of that ahead of the presidential election. Alassane Ouattara, the incumbent president, is running in the game once more. The Egyptian market softened 0.42%. Kenya market was down less than 0.1%, and the South African GSC 3.28%. The currency also deep dive, but still around the $16 handle to the dollar on the day. Tito Mboweni made a very wide-ranging proposals and forecasts in his midterm budget. But again, the whole angle is still there about the South African Airways bailouts, by the way. We'll get to that in a short while. Look at East African markets. The Tanzanians yesterday went to the poll, about 30 million of them. Quite an interesting scenario. But again, the folks who got their hands burnt in Cytonn Investment are still worried that they're asking the authorities to come to their aid. How this will be resolved, I'm not too sure. I'm going to ask Ali what he thinks. The Capital Market Authority wants compulsory listings for MSMEs who are involved in government deals, and what of that? What exactly are they trying to do? Kenya's stock market dropped to number 7 on Absa African Markets Attractiveness Index. I think that's still a very good position, if you ask me, on the African continent. And I'm so much enthused by this fiber optic infrastructure project that Kenya is undertaking for its northern region. Of course, don't forget, they still drink beer on Seychelles Islands. By the way, if you have been there, revenue for this company, Seychelles Breweries, grew 0.5% in the period under review. Ali, I'm sure the beer is still under consumption on Seychelles Islands.
Yes. Let me start with the Seychelles. Of course, I think it's the smallest country by citizens, smallest African country, about 110,000 Seychelles citizens. For the first time, the opposition gained power earlier this week. This new president leading the opposition into power. Very unusual situation in Africa, and a very gracious speech made by the incoming president about needing to rely on the outgoing president. And, you know, given that Seychelles is suffering from a tourism slump, it receives 2x its total population every year in tourism, high-end tourism. That's a pretty good performance, I think, growing 0.5% given that context. Seychelles at the forefront of the blue economy issued, if you remember, a blue economy bond last year as well. And interesting political dynamic there as well. Of course, you started by mentioning Tanzania. This is the big election, the elephant in the room. The election was held yesterday. Some lives were lost in Zanzibar and Pemba. There's been tremendous repression of the opposition. And I saw some reports this morning questioning credibility of the ruling party declaring victory, and the risk of serious mayhem and chaos if that result is not as transparent as it should be. So keep an eye on events in Tanzania as they unfold in real time. Speaking to your other reports, Kenya launching 360 kilometers of high-speed fiber optic in the northern region. This is funded by the World Bank. This is, I think, part of where Kenya is seriously ahead of the sub-Saharan African curve, which is in it is in this whole data game. Safaricom very much leading the charge, connecting Kenyans on mobile data. But this is an important project, I think, in bringing the northern part of Kenya, which is typically underperformed because of its lack of connectivity to the rest of the country. And we know that today it's not just about physical infrastructure, it's also about digital connectivity. And this is something I think that you folks in Nigeria might consider. It brings people together very, very quickly. The CMA is talking, looking at the whole COVID economy and saying that in order to increase transparency in those companies who are bidding for contracts, they should look at listing at the Securities Exchange because they would have a higher threshold of corporate governance. So that's one initiative. Kenya dropped to 7th on the Absa African Markets Attractiveness Index. That was, when I analyzed the metrics, that was a lot to do with the foreign exchange, where Absa was basically saying it's not as free as it might appear on the ticket, and there were some other issues. So it was unfortunate that drop, but Kenya still remains an attractive destination for investors into sub-Saharan Africa. Cytonn has been in the regulators' crosshairs for a few months now. Cytonn, very much a go-go growth real estate play on the Kenyan economy. And as you probably worked out, real estate is struggling right now. Edwin Dande, Mercurial, CEO of Cytonn, has launched a very strong defense against the Capital Markets Authority, arguing about the way he's been treated, and basically saying that it's a bit of a hatchet job. Whether it is or it isn't, I can't tell you, but that's been the argument. It's been in the press. What he was saying was he was disintermediating the banks. He was going direct to high net worth investors, saying instead of putting your money in the bank, I'll give you the interest rate the bank would normally lend to me. And this was high yield returns, but obviously, real estate has slowed down quite dramatically in Kenya, and the throughput's not happening, and therefore, I think they've got to probably restructure that high yield book, and that's what this is all about.
Interesting. Coverage of the East African markets. Let's touch on Nigeria very quickly, and earnings is one big story that we're dealing with. Despite the news around Ngozi Okonjo-Iweala, the WTO, and the United States are stepping forward and putting some bricks on the path of the development economist and former World Bank managing director, in securing the seat at the WTO as the Director General. So yields on Nigeria's treasury bills have hit ground zero, as it were. 91-day bill will give you about 0.34%. But if you invest in the market yesterday, you would have gotten about 1.58%. COVID-19 is boosting some of the listed healthcare companies, such as FitSyn. And surprisingly, the Ghanaian government says it's bought 100% of AirtelTigo. That's very interesting. So I don't know what they're doing with that. But that looks like just an investment that they just want to keep on the books, by the way. And earnings season, not just in Nigeria, but elsewhere, Onatel, which is a telecom company on the BRVM stock exchange, posted a negative 4% net profit in third quarter. So we're all counting down to, as it were, Uchenna, let me ask you here, from all that we have right now, yesterday was a particularly a nasty Wednesday for the global stock marketplace, and today is not looking exceptionally different, despite some of the good earnings that we've seen even this morning from some of the companies in Europe. Today, we are going to hear from the ECB President, Christine Lagarde. So there's no stimulus and there's no vaccine before the November 3rd election. So I think those noise are out already. Now we're dealing with the reality.
Yeah, that's what has been sort of being focused on, and I think I mentioned a couple of times on different of our sessions that it is basically how market participants perceive risk, and what risk they are literally focusing on. And the risk right now is the reality that there is a second coronavirus wave, COVID wave, and how would the economy respond to that? Macron mentioned yesterday that from an economic perspective, this will be worse than the first wave. So and when such should I say aura or indication is being pushed out from different top should I say administrators or financial institutions managers, highlighting the risk that comes with the possible second lockdown should I say scenario. That in itself is not giving the confidence to the market. Mind you, Boston, the majority of the moves we've seen, bullish sentiment moves that we've seen for the major part of this year, has been relied on the fact that there will be a vaccine, there will be another lockdown, and coronavirus has actually been subdued. But that's not the case now. That's not the case now. And my worry right now is that central banks have sort of gone out almost significantly and aggressively with their actions when it comes to their monetary stimulus. What is left in the coffers as regards to combating a possible second coronavirus lockdown? This is another level whereby we are looking to see a slowdown in demand and business and economic activity in Boston.
Yes, watching Bloomberg this morning is called economic destruction of Europe. Ali, you agree with that?
So just to reiterate, I mean, we're now clocking 500,000 cases a day. I mean, and this is probably a gross underestimate. Obviously, there's been a significant surge in the US and particularly in Europe. Emmanuel Macron yesterday made a very interesting comment, which few people picked up on, and he was speaking about the current virus, which is ripping through Europe, having a mutation, and that's making it more virulent. And therefore, this whole vaccine fantasy, which has been like a shell game on the stock market, make a vaccine announcement, get the stock market going up. It's going to dawn on people that there is no vaccine silver bullet coming anytime soon. And therefore, when I look at the scenario, I mean, the World Bank, IMF report spoke about this sort of strong rebound next year. I just don't see where it's coming from. I really don't, and I think they've been deluded all year. They started off with a V-shaped rebound in February, March. I mean, forget about it. So now I think in the last, what I would say, 24, 48 hours, you've seen this big sell-off in the stock market. You've seen, you've seen a big wobble. And my concern is with central banks essentially admitting that they're now running out of bullets. What happens next? I mean, it's got to go on the fiscal side. Are they ready to do it? And then I think, we've got a situation where there's far too much optimism still in the markets. This includes the oil price, for example. It includes the stock markets. And my bet is that we're going to have negative interest rates across the board, all in G7 countries, and that's coming in early next year.
Okay, so in terms of where the safe haven really is now, Goldman Sachs, Uchenna, has been forecasting that the gold's bull run will continue into 21. Do you think the current situation with the volatility and the uncertainty and the concerns around the U.S. Presidential elections in the next few days are all making good just a forecast by Goldman Sachs about gold still being the safe haven moving forward?
Gold always served as that intrinsic store value and would always be seen as a safe haven. But that is actually dependent on the intensity of the sell-off. When we compare to just some a recent issue that was during the February March crash, you would realize that gold was actually selling off during that period, and that's what happens when a lot of the trading accounts are actually hitting that margin call situation. People would have to liquidate their holdings in gold to sort of meet up their accounts and blow up their accounts. So yes, from a short term, medium term, we wouldn't get that reactionary store in value when it comes to the precious metal, the yellow metal. But what can happen really in the longer term, given the destruction of our currency as central banks are being aggressive with accommodating for easing into the economy as a result of what we're currently facing, yes, gold would definitely outperform a lot of his counterpart assets and other investment vehicles. But a short term, medium term, with what we might likely experience, what is kind of playing out at the moment, if we see a sell-off of what we saw during the first quarter this year, I don't expect gold to even perform better in any form of way. I think it's going to. We saw a bit of gold trading lower during this 24-48 hour during the equity sell-off. So the issue here is how much our market participants still deluded, as Ali has said, when it comes to the pricing, the asset pricing of assets at the moment. Because the reality is all of the optimism, or majority of the optimism we've seen in all of the investment vehicles have been a result of how the market is having a possible V-shaped recovery. There is a vaccine, coronavirus is behind us, and all of these things. And when the reality starts to set in, and the reality of the fact that central banks are actually in their last, at the bottom of the barrel, let me put it that way, when it comes to their accommodative stance and monetary tools, then it becomes really, really worrisome as to how market participants will adjust to the reality. One thing is actually very clear: every other economy central bank can afford negative interest rate. The Federal Reserve, however, given the fact that the US dollar is the world reserve currency, going into the negative territory when it comes to interest rate. Honestly, I don't know how that would play out. I really do not know how that would play out.
It's going to be a very tough one for the rest of the world if US goes negative. Where do you get the upside from? Maybe we'll look up to Beijing, by the way. But again, it's just beyond those jokes and all of that. Let's talk about Southern Africa. And I'm sure Ali is angling to talk about yesterday's Tito Mboweni's budget. Inflation and all of that. So let's just spend a couple of minutes to talk about this yesterday's Tito Mboweni's presentation. Ali, what's your what I call your cutting razor?
Tito, in my opinion, had an impossible task, but I mean, as always, he acquitted it very well. I think the problem for South Africa is they need growth. And at the moment, they haven't got it. And the question is, how do you get back to growth? Is throwing more money at underperforming state-owned enterprises going to do it? Is, what exactly is going to be the catalyst for that growth, which would then help South Africa return to a more normalized situation? And I think overall, he's got to freeze salaries, which he proposed for 3 years. He's actually got to cut the size of the government. He can throw more money at Fly SAA, and he's proposing something like $600 million. But it's like a Groundhog Day. You know that in 12 months' time, the same thing is going to come up with SAA, with Eskom, and you want some Lee Iacocca guy to go in and fix all these companies. And I don't see that sort of person on the horizon as yet. I think the Rand, which had gotten a little bit optimistic ahead of this budget, has sold off to around 1640. We could see more downside price action, in my view, given the context. To me, I haven't seen a solution to the problem. I think Tito basically is doing his best, but it's a very, very difficult task. As you said on your headlines, Total made another oil discovery, which is a positive step, and a big announcement out of Lusaka, where the CDB, the Chinese Development Bank, has agreed to a moratorium on interest and pushing out of the interest payments. So that's a positive development in Lusaka.
Okay, so in terms of, just a quick one, in terms of cutting the wage bill, how much of this yesterday's budget presentation by Tito do you think would be a pullback from the political class? Because when you're touching a wage bill, for example, in Nigeria, I'm sure Uchenna will testify to that, that is a very tough one if you want to touch the current expenditure, because now you're going to political issues about the voters, political party supporters, and what have you. So do you think Tito will be able to pull this through with the ANC and the political guys behind Ramaphosa?
So I think it's going to be practically impossible, and you can see that they're already complaining. And this is not a symptom of a disease, a South African disease. It's a symptom, as you're saying, of a disease which is across the continent. And furthermore, it's not allowing enough money in our budgets for development expenditure. All of it's being consumed in recurrent expenditure. Has he got the cojones to force this through? This will all depend on Cyril. Is Cyril going to back his finance minister to the hilt? Have we reached a point when your feet are being held to the fire and you've got to do it? Maybe not just yet, but at one point we're going to get there. It might not be right now, and my bet is it's not that we're not there yet. When maybe they will use the World Bank or the IMF as cover for making those sorts of decisions, but that will be a bit down the road.
Thank you, Ali, for that. Let's bring in the WTO leadership question. Uchenna, the face-off between Beijing and Washington over trade and all of that, do you think is beginning to come to the fore in the play as to who becomes the next Director General of the WTO?
I think over this period, while Nkoji Iweala was trying to be nominated for the sport to head the WTO, one thing was very clear. I got to understand the dynamics of the current, should I say, overseeing or oversight when it comes to the WTO. Right now, they are just like a poster institution. They actually do not have the countries listen to them. Countries in this way, they can't really control this stakeholders' country as it is. So I think whoever it is that has been confirmed as the new leader has a lot of work to do. Trump administration does not see the WTO as fair, and by principle, they have felt that they have always bent their back to the will and the directives of the Chinese. So in that way, there's a lot of, should I say, subjectivity when it comes to the WTO. So I think it's quite key what the new should I say, administrator, head administrator is coming on to do. It is to foster sort of peaceful relationship. And also, one thing that needs to be cleared here is that what we see with China and the US is far more deeper than what is being projected here in the surface and into the financial market or the geopolitical sphere. This is a scene of a tussle between world powers and who is going to dominate the world globally. You know, so there are just some things that overseeing institutions cannot really mediate at the moment. Except, of course, they come out and say, well, this is far bigger than what you're trying to talk about. This is beyond trade in itself. This is more like how we want to dominate the geopolitical scene, the geographical scenery, and basically the technological space. So I think it has to be a scene of how what happened with the November election. You know, if Trump comes in, I believe he's going to be very extremely aggressive with the Chinese. I think Biden, in his own way, has some sort of diplomatic approach. I'm going to believe what we'll be seeing from Biden's administration if he comes into the presidency, U.S. presidency. It's more like an Obama kind of leadership, whereby a lot of this approach are actually being done through the diplomatic means and method. And I think in a way, the Chinese might prefer that in some shape or form. And if you look at one of these recent rants from Donald Trump, he has highlighted that Biden is going to sell out the American economy to China. So I think those things, those variables are quite key, and how these things can really materialize going forward.
That's a really interesting point.
Ali, please go ahead.
Sorry to interrupt, but Uchena's interpretation, I think, is something that not enough people hear about, and it's really important. I think, I would agree that the China-US situation, Biden might be a little bit emollient, but basically the core electorate, the core policymakers have moved in Trump's direction over the last 4 years. And I think the Americans see the African policymakers across the board as being way too soft on China, and a little bit, even I would argue, a little bit bought out. Of course, the candidate for the WTO, very strong candidate, and it's unfortunate that she's got caught in this crossfire. But I think the very interesting point is about the higher echelons of Pan-African policymakers tend to give China a very, very wide leeway, and that's what I think is coming up coming up in Washington.
Interesting scenario, interesting times. We'll just give it some time and see how it all plays out. We'll have just a couple of days or weeks down the line to find out. But again, let's just go to North Africa and begin to wind down on today's show with the Morocco's PPI down slightly, 0.1% in September. Attijariwafa Bank in Morocco, net income up 2.73%. In the first 9 months of the year, the numbers look good. That's the bank that just got a whole lot of award or recognitions recently by the Global Finance magazine in the US. South Cairo Mills reported a 10% net loss in the full year 2020-21 period, and it's a whole lot there to talk about within the Egyptian export market and what is being done. Ali, give us just your final words on North African markets.
So, I think North African markets, Egypt, of course, remains the darling of the carry traders. They're still lapping up these double-digit local currency returns and feel reasonably comfortable that the Egyptians will manage the foreign exchange. With respect to Morocco, we had that downgrade. We've had a bit of pressure on Moroccan asset prices, but this is a strong economy in my view, and I think the people will continue to support it. Attijariwafa Bank, very strong bank, and as you can see, net income up 2.73% in the year of the virus is not a bad outcome given the data points we've seen out of Morocco. So for now, one country I'm keeping an eye on is Algeria. The president was airlifted out into Europe because he's sick. You've got the application of the loan application to the multilaterals, first time in many, many years. And then also just to finish off with Libya, where everyone's watching whether they can step up production up to 1 million barrels per day, which will add pressure into the oil market in a soft demand outlook.
Okay, thank you so much, everyone. Let's leave it there for today, this Thursday here on Frontier Opening Bell. Thank you so much for your time. Uchenna Minis, global market strategist and the managing partner at BlueFX Nigeria. Thank you so much, Uche, from Lagos, and from Nairobi, the head and CEO, founder of Rich Frontiers Management, Ali Kansachu. Thank you so much. Have a great day. Thank you, and see you next time.